What rare insight do few dare to embrace? This question is a riddle wrapped in shadows, not easily unraveled. Perhaps it's simpler to begin with what everyone nods to. Chaos reigns not in solitary minds, but in the swirling currents of collectives, tribes, movements, eras. A philosopher once mused this before his own clarity faded. To pierce the veil of a widely held illusion is to uncover the gem of uncommon truth lurking beneath. Take a basic notion. Businesses thrive to grow wealth, not to bleed it dry. This seems as plain as daylight to anyone who pauses to think. Yet, in the twilight of the last century, losses were dressed up as bold bets on a dazzling tomorrow. The prevailing chant of that digital dawn era crowned fleeting attention, clicks and eyeballs, as the new gold standard, sidelining the dusty old metric of profit. Crowd-approved ideas only reveal their absurdity in the rearview mirror. When they shatter, we label them mirages. The tech frenzy of the late 1990s swelled into the grandest illusion since the 1929 collapse, and its echoes still warp how we view innovation today. To see clearly, the first step is to challenge the tales we've inherited about yesterday. Revisiting the 90s, a turbulent canvas. The 1990s shimmer in memory as a golden age, a time of abundance and bright horizons capped by the wild rise and fall of the digital wave. But nostalgia paints over the cracks. The decade's story wasn't all sunshine. Its final burst of mania unfolded against a gritty global backdrop we've since swept under the rug. It kicked off with a surge of joy as a wall crumbled in Berlin in November '89, symbolizing a world unshackled. That euphoria fizzled fast. By mid-1990, a slump gripped the U.S., officially lifting in '91 but dragging its heels through '92, with jobs still scarce. Factories faded, and the shift to a service-driven world was a slow, bruising slog. From '92 to '94, a fog of unease settled in. Footage of fallen soldiers flickered endlessly on screens, while fears of a shrinking American edge sharpened as work drifted south of the border. This gloom toppled a president and fueled a quirky billionaire's bid, netting him nearly 1 in 5 votes in '92, a third-party feat unseen in decades. Meanwhile, the cultural pulse, think flannel, raw music, and a grim fascination with escape, hardly radiated optimism. Tech's heartland, Silicon Valley, mirrored the malaise. Rival nations seemed poised to dominate the chip race. The internet? Still a sleeper, hemmed in by rules barring commerce until late '92 and clunky tools that kept it niche. Back then, number-crunching economics outshone code-crunching as the hot pursuit on college campuses. Tech felt like a quirky sideshow. Then came the spark. A gateway tool launched in late '93, letting everyday folks step online. It evolved into a browser that by '94 spread like wildfire, jumping from 1/5 of the market to nearly 4/5 in a year. Its maker went public in '95, still in the red, yet its stock soared from modest roots to dizzying heights in months. Other pioneers followed. A search portal debuted in '96 at nearly $1 billion, a bookseller in '97 at half that. By '98, their values had ballooned beyond reason. Doubters pointed to sky-high price tags dwarfing any grounded measure. The market, it seemed, had lost its tether. This view wasn't wrong, but it missed the bigger picture. In late '96, a financial sage cautioned that unchecked zeal might be inflating dreams too far, years before the fall. Investors were buoyant, sure, but not entirely baseless. The world beyond tech was stumbling. Currency crises toppled economies in Asia by '97. A debt-riddled giant devalued its coin in '98, sparking panic that shaved double digits off U.S. markets overnight. The dominoes kept falling. A leveraged fund imploded, losing billions and nearly dragging the system down with it, until a rescue slashed rates to steady the ship. Across the Atlantic, a new currency launched in '99 to yawns and doubts, sinking fast and needing a lifeline by 2000. Against this shaky stage, the internet's brief, wild ascent starting in '98 wasn't just madness, it was a lifeline. The old ways were buckling under global strain. Something had to ignite, and fast, to promise a way forward. The digital realm stepped up as the only contender. The fever, September '98 to March, Ors. The dot-com surge was a fleeting storm, 18 Months of delirium from 98 to 2000. It turned tech's cradle into a treasure hunt, awash with cash and chased by dreamers, schemers, and everyone between. Weekly, fresh ventures vied to outdo each other with glitzy unveilings, though few stuck the landing. Instant tycoons flaunted fortunes on paper, splurging on lavish nights, and bartering with stock scraps that sometimes passed as currency. Hordes abandoned steady gigs to ride the startup wave. One seasoned student juggled half a dozen ventures at once, a combo that, in saner times, might raise eyebrows but then felt like genius. The boom's end was predictable. The winners thrived by shedding cash as they swelled. Yet, when the rhythm pulsed, sitting it out felt irrational. Adding .com to your name was a magic wand for instant worth. A startup's wild ride running a payments venture in late '99 felt like teetering on a tightrope. Not from doubt in the mission, but from the circus around it. The valley buzzed with folks launching and unloading outfits with reckless ease. One dreamer boasted of plotting a market debut before even forming a company, and saw no oddity in it. Sanity started to feel like the outlier. The goal was audacious: forge a digital coin to rival the world's reserve currency. The first stab, zapping cash between handheld gadgets, flopped, dubbed a laughable misstep by pundits. Those devices were too rare, but email was everywhere, so the pivot came: payments via inbox. By late '99, it clicked. Anyone could hop online and move money smoothly. Still, users trickled in, costs climbed, and scale eluded. To crack it, 1 million adopters were the target. Ads didn't cut it. Bank talks fizzled. So, cash became the lure. $10 to join, $10 per referral. Users flooded in, growth spiked, but so did the tab. In that frenzied climate, such gambles felt shrewd. A big base could yield fees to flip the red ink black. Funds were key, and the clock was ticking. The bubble's burst loomed, and faith in grand visions wouldn't outlast it. A news piece in February 2000 pegged the venture's worth at $500 million, and weeks later, $100 million rolled in. Investors leaning on that loose math. One overseas backer tossed in $5 million sans terms. Returning it proved impossible when they dodged the reply. That cash, sealed as the bubble popped, was the lifeline to turn the dream real. Echoes and insights. The peak hit in March 2000, with markets cresting at lofty heights, then plunging weeks later. By late 2002, the bottom scraped low, and the crash was cast as a reckoning for the decade's tech fever. What once glittered as boundless promise was recast as reckless avarice, its curtain firmly drawn. The fallout taught caution. Tomorrow became a vague horizon, and big dreamers were sidelined as outliers. The baton passed from tech to global trade and mortar, spawning a new mirage in homes and far-off markets. Those who stayed in the game distilled 4 tenets that still steer the ship. Creep, don't leap. Bold leaps fueled the bubble. Now, small steps are the safe bet. Visionaries are suspect. Modesty rules. Bend, don't break. Stay nimble, unscripted. Plans are rigid. Testing and tweaking are the way. Tweak, don't invent. New turf is risky. Build on what's proven, riding the coattails of winners. Build, don't sell. Great wares spread themselves, pushing them smacks of desperation. These rules hardened into gospel. Defy them, and you tempt fate's hammer as it fell in 2000. Yet, flip the script, and the reverse might hold truer. Dare over dabble. Playing small risks irrelevance. Boldness can spark breakthroughs. Map over. Drift. A shaky blueprint beats wandering blind. Pioneer over shadow. Copying chokes margins. Carving new paths unlocks value. Pitch matches craft. A gem unsold gathers dust, spreading. It matters as much as shaping it. Yes, a bubble swelled in tech. A time when ambition outpaced reality. Too many chased the leap from nothing to something, often with more hype than heft. But the era grasped a kernel of truth. We had to stretch beyond the ordinary. That March 2000 zenith was a fevered high. Sure, but also a lucid moment. Eyes peered ahead, saw the tools we'd need to thrive, and believed we could forge them. The need for fresh ingenuity persists, perhaps even a dash of that late 90s spark. To craft tomorrow's ventures, ditch the crash-born creeds. Don't just rebel against the herd. Question the lens history handed you. The truest defiance? Thinking unbound by yesterday's ghosts,